Hi, I'm Nick, and today we're going to talk about everything you need to know about the tax-free savings account. Now, the tax-free savings account, or TFSA for short, is a savings account here in Canada that's been designed for Canadians to save money. It started in 2009, and each year you have a certain contribution limit that you can put into this tax-free savings account, and the money within the tax-free savings account will grow tax-free, and when you take it out, you also will not be taxed, nor do you have to report it on your Canadian tax return. So it says it's a savings account, but it's really more of an investment account. You can virtually have any type of investment you want within the TFSA. You can have cash, mutual funds, stocks, GICs, bonds, really whatever suits your investment appetite, you can own within a tax-free savings account. Now, it's easy to open up a tax-free savings account. You can go to a bank or any type of investment company and you should be able to get one set up. But there are 3 requirements that you need to open up and to contribute to a TFSA. First one is you have to be 18 years of age or older. Second is you need to have a valid SIN or social insurance number. And the third is in order to make contributions, you have to be considered a resident of Canada. Now for the first one, being 18 years of age or older, let's say it's 2020 when I'm making this video. Let's say in May 15th, 2020, you turn 18. Now you have to wait until your birthday, until you turn 18 officially to open up the TFSA. But once you do, you have the full 2020 contribution room available to you. 2020, that contribution room is $6,000. So it's not prorated based on the amount of time that you're eligible, which is really good, especially if your birthday is later in the year like mine. Now the other thing is you have to be a Canadian resident. And again, so if you're a part-year resident, the amounts that you can contribute to the tax-free savings account will not be prorated in the year that you become a resident of Canada. You can contribute that full amount. So we talked a little bit about contribution limits and contribution room. The nice thing about the tax-free savings account is your contribution room is cumulative, which means for every year that you're eligible, you have that contribution space available to you. And if you don't use it, that contribution space gets added to your next year's limit. So let's say you're eligible in 2019 and in 2020. Both years the contribution limit was $6,000. If you were eligible in 2019 and you didn't open a TFSA, you didn't contribute to any TFSA or anything like that, you would have that full $6,000 amount carry forward into 2020. So you would have 2020's contribution room of $6,000 plus the 2019's contribution room of $6,000. So I could contribute up to $12,000 without penalty in 2020. Now I think since 2009, when it first started, if you've been eligible for all those years, you would have over $69,000 to contribute. I would encourage you to check how much space you do have available to you before you start, because there are penalties that are calculated on a monthly basis for over contributing. So you can check online via your CRA My Account, or you can give the CRA a call. So again, in the name, tax-free savings account, any investment income that you earn in the account is tax-free. And when you take it out, it's tax-free as well. So say I own a stock in my tax-free savings account, it grows from, let's say, $5 to $500. That is all tax-free. I don't have to pay a single dime of tax on any type of gain I make in the tax-free savings account. Now there is a minor detail though, and that comes with owning US stocks within your tax-free savings account. If you own a US stock that pays out dividends, those will be taxed, and the rate of tax is 15%. So let's say, for instance, you own stock in McDonald's. They currently have a dividend yield of about 2.5%. Those dividends would be taxed at 15%. However, any capital gain that you do make on those stocks, again, are tax-free. I also want to mention, if you are a U.S. citizen with U.S. filing requirements, you will be charged tax in the U.S. on your tax-free savings account. The IRS in the U.S. does not recognize the tax-free savings account here in Canada as a tax-free account. So you will have to work with your accountant regarding your investments if you have any within the TFSA. It would be a good idea before you open one and before you start investing within a TFSA. If this is you, if you have U.S. obligations, check with an accountant first before you go gung-ho into the tax-free savings account, because not only will you pay tax on the gains in the U.S., but depending on what kind of investments you have, it might trigger additional filings, which can get complicated and can get expensive. So always check with an accountant first. But yeah, other than that, that's the tax-free savings account. It's quite simple and flexible. So I do see a lot of people use it as just a savings account to save for kind of mid to high level expensive things, vacations, school, emergency funds, cars, whatever you want to save for. It's a great avenue to do so. And the best part about it is that, unlike the RSP, you can take money out at any time and you don't lose that contribution space. That contribution space becomes available to you again in the next year. So let's say say I took out $5,000 from my TFSA in 2019. My 2020 limit will be that $6,000 of 2020's contribution limit, plus that $5,000 I took out in the prior year, plus any unused contributions that I've accumulated in the past. So that's really great. So I can take money out and then I can replenish that tax-free savings account in the following year. As a tax accountant that deals with a lot of cross-border issues, I do want to bring up the situation of residency one more time. I do want to let you know that if you are a Canadian and you have a TFSA and you leave the country and you're working with your accountant and you've established that you've ceased Canadian residency, you will not be able to contribute to your tax-free savings account while you are a non-resident. Again, it's one of the requirements for contributing to a TFSA is you have to be 18, valid SIN, and a Canadian resident. So if you cease your residency, you will no longer be able to contribute without penalty. You are, however, allowed to hold on to your TFSA, and in Canada, any gains that you make inside the TFSA while a Canadian non-resident are still tax-free, at least here in Canada. You're going to want to check with whatever country you're a resident of currently to see if those investment gains will be taxed or not. Most of the time that has to do with the tax treaty between Canada and the applicable country. Again, like we talked about earlier, in the US, there is no deal with the IRS regarding the TFSA, so the gains will be taxed. Once you come back to Canada and you reestablish residency, you will be able to contribute in the year you reestablish your tax residency without a problem. So that's everything I think you need to know about the tax-free savings account. If you got value out of this video, please give it a thumbs up. And please let me know in the comments below whether or not you have a TFSA and what you're using your TFSA for. What are you saving for? What are you using within the TFSA? Let's have some good discussion down in the comments, and I will see you in the next video. But for now, happy taxing.